So if you happen to own investment real estate, we can save a failed 1031 exchange if you're working with us in our strategic alliance that does the 1031 service. And that way you're able to have a backup plan, but that applies just to investment real estate owners. But everybody else, cryptocurrency, business owners, real estate owners that are selling primary homes, not investment real estate, need to set up a deferred sales trust prior to the transfer, prior to the sale.
The other thing is, for people that are listening to this, a lot of our clients, as they're got their head down and they're moving, I can imagine there's a timing aspect to this. When is a good time to engage you in this process to make sure your ducks in a row? Because I imagine if this is something you can unwind once you've had that exit, it's too late. When is a good time for someone to start thinking about this process and to engage you to make sure everything is in order?
Yeah, it's human nature to typically, put it off until you have that, that offer on the table, or you're about to close escrow, and then maybe now you start to think about these things, because as entrepreneurs, we're so in the business all the time and growing, especially during the exit, the emotional part of that. You've built something for a long time and it's all coming down to this sale, and it's multiple millions, it's tens of millions, right? And now you can fumble the ball, you will. We call it fumbling the ball when you don't have a tax plan, you haven't built a capital gains tax exit plan. And all of a sudden, 20, 30, 40, 50% is gone, right? For this silent partner, the IRS and the state, local authorities, right, have been with you the whole time, but really you've been doing all the work, right? So, and it's part of the system we live in. But there's a better way, right? You can start planning now. And so the best answer is now. Now is a good time. When's now? Well, you have now until you exit, right? And hopefully you're going to be scaling your company to multiple $1 million of exits, tens of millions of dollars, and $100 million, $1 billion. No matter size you have, we can work with, whether it's a C Corp, S Corp, LLC. But timing is crucial, right? Because if you don't set it up prior to the close of escrow, prior to the buyers removing contingencies, then it's too late. And when it's too late, the tax is triggered. And those are the worst calls that we have. If someone calls us and says, I just sold my company for $5 or $10 million. I sold it 30 days ago or 2 weeks ago. I found you on the YouTube. I found your book. Can I still use the trust? And we're like, sorry, you can't. That's called constructive receipt. It is taxable. You're going to owe the tax. This is also why we take the pressure off when we work on a 100% conditional basis, meaning you don't have to pay anything unless and if you actually want to use the trust, and if your deal actually closes, but there's no obligation to do that. You can get out for any reason. And that gives people the chance to just relieve the pressure, get to know who we are, how it works. But it is very important that we set it up prior to the close of escrow. There's one little exception to that. We do have what's called the best 1031 exit plan. And so if you happen to own investment real estate, we can save a failed 1031 exchange if you're working with us in our strategic alliance that does the 1031 service. And that way you're able to have a backup plan, but that applies just to investment real estate owners. But everybody else, cryptocurrency, business owners, real estate owners that are selling primary homes, not investment real estate, need to set up a deferred sales trust prior to the transfer, prior to the sale.
Okay. I hope everybody is letting this soak in and really taking Brett up on his offer. I would highly recommend reaching out to him. You can get him at capitalgainstaxsolutions.com. If you look at the video, the links below, there's ways to reach out to him. But he's been a good friend. He's a wealth of information. This is not something you want to overlook. We focus a lot on the earlier fundamentals and the data rooms and the transaction and the valuations and all that kind of stuff. This is just as important. And to get this knowledge, I mean, I've been in a few conversations even after meeting Brett with some family offices that had some exits, and their story was pretty painful, where they had a nice exit. One was like a $40 million exit, and they set up a foundation and they want money for the foundation, and that was going to take everything. And then at the end of it, I think a couple of years later, they look back and, they're looking at really having to pull the strings back to keep things going, because they got hit so hard on the taxes, and that all could have been avoided, because that's what they were doing. They wanted to reinvest in other companies, and that was just kind of taken away from them through capital gains. So this is a very tactical battle strategy that I can't stress enough to understand. Again, as an eye opener for me, I know some of the exit stuff and what you need to do from valuations and transactions, but this is really a must have. I know all of our portfolio companies, all of our clients that we interact with are going to be exposed to this. And that's why, again, Brett, I appreciate you spending time with me and explain just what this is, because even seeing you speak at these family office events, it's an eye opener for a lot of these people in the room these are, 8, 9, 10 figure type people. And they're all kind of coming at you going, I didn't know this existed. So what you're doing is really good work in helping people out, man.